Hey there, random internet strangers. It's Random Forex Guy here with a early weekend update. Uh, just a few things I wanted to go over. I gave this a lot of thought over the week, driving around, listening to all the crypto gurus out there, and really enjoy you guys. I hope that you enjoy my videos as well. I know they're short and they're not as sophisticated as a lot of other videos out there, but I think that they're pretty informative. I try to give something both to the beginner and to the advanced person. So I'm going to go through all that today. I'm going to go through several things today. You're going to be surprised about this video. But let's start with something very simple. So you got your fiat currency. You want to exchange it for Bitcoin on Coinbase Pro. How do you do that? That's what this is about. As you can see, I have obtained $1,000 of USD, and I want to turn it into Bitcoin. So what we want to do is we want to do a limit order. So we hit the limit order right here. And then we want to figure out our price. Now we had a nice run up in price, but we don't want to buy when we're going up. We want to buy the dips. So I think that prices, you see how it's gone down. This was that when I first said that Bitcoin was going to hit that low right there. And then it happened again over here. That strengthened that support level, that demand level that I talked about, and didn't quite get down so low this time. I think we're going to drop back down again. I'm guessing about around here. That Iran scare brought in some new money to the market, so I think it's just going to continue to fiddle fart. It's just going to fiddle fart a little bit higher now because we got that extra market cap. And I'm going to get into that today as well, a little bit about market cap and how important it is. So what I'm going to do is I'm going to set my limit order at about $7,200. So what we do is we go over here. We make sure this is on limit, not market or stop. We won't ever mess with market. And stop orders are for our take profits, which I'll discuss in another video when we're ready to take profits, 12 to 18, 24 months later. But I'll probably bring that up a little bit sooner. So we want to put in our price of where we want to buy. I want 7,200. That's where I want to buy. The price I think Bitcoin is going to go down to, which is about $900 right now. So that'll save me $900, and that can compound very quickly. And what we want to do is just max it out, and that $1,000 equates to right now 0.1381979 Bitcoin. So you go down here, you have your fee is $4.98. That would have been 20 bucks over on Coinbase. So it saved you $15 on 1,000. This is your $1,000. You place your buy order, and it's that simple. There it is right there, and it's open right now. Now it won't fill until price reaches down to 7,200. We don't chase price. We're buying the dips and dollar cost averaging in. I've been right around here. I did buy a small portion right over here around 79, and then it just clipped it and then went back up. So, but it was a very small order on one of my other platforms. It's my leverage platform, and I won't be using that for some time yet. I just use that for my regular trading, and I was just testing something out. So as when price goes down to 7,200, that buy order will get triggered, and I will be in the market at 7,200 and not 8,100. So I save myself $900, and I save myself $15 in fees. So I just wanted to go over that. That's how you do that on this is Coinbase Pro, not Coinbase. And then once this is triggered and filled, I will move this over to Coinbase, put it either in my vault or keep it on the exchange there and exchange it around for other currencies, because you can exchange other cryptocurrencies for free. So on to the next thing I wanted to talk about, and that is my trading platform. This is a platform I use. It's called MetaTrader. This is mainly for Forex, and I just want to kind of go over. See, I threw it. This is not real money, by the way. This is fake money. This is another experiment that I had going on with Bitcoin. This is margin trading, and this is way too strong and heavy, but it's not real money, so it's not a big deal. It was an experiment that I'm doing right now. But I bought some Bitcoin at 7,200, and now price is $900. It's actually the leverage is not that bad. It's right in there at we're at 88.08, and I bought at 72, so it's right there. It's 1-to-1 leverage. So you just want to be careful when you're trading with margin that you're not over leveraging yourself. This is way too high or too low. This should be in the thousands at a minimum. But you can get down into like 800. It starts getting a little iffy there, but this is like 300. And I just been letting this trade run because I know it's fake money, so I don't care. But I have my trading system for trend trading. I have several. I have trend trading, I have retracing trading, and then I have reversal trading. And I'm going to talk about trend trading today. Real simple philosophy. These are not the indicators that I use. I use some different ones, but I basically use I call a quick trend, a slow trend, and an oomph indicator. Very simple. You don't need 850 million indicators and lines and stuff, although my regular charts do have that, but that's because I'm looking at those three different types of trades, and then when I look at a trade, I only look at the indicators that I need. I just have them all up, and sometimes it even confuses me, so I have to pull some of them off. But for trend trading, what we want to do is we want to find when that oomph happens. So I have our Heikin Ashi, it's my favorite indicator, and I look for movement, change from red to green, for example. Okay, here it changed to red to green. But this indicator, this is what I call a quick trend. And they have a slow trend, it's a little bit slower. So they say, no, not so fast. When this turns blue, that means we're in the clear. So the next candle, it turns blue. Now, did I have some oomph here? Now, I touched that line, but I didn't cross it, so I probably would not have entered this trade. Even though it was a good trade, it would have made some money here. I would have got out here, and I would have made a few points, maybe broke even. I would have made a few dollars. I would have got out here, according to my rules, either here or here, depending on how scared I was. So that would have been like $947. Not too bad. So the oomph indicator, that tells me how fast the trend moves. This is called a Bollinger Band flat. And when this yellow line moves outside the red lines, that tells me that there's something abnormal going on, that it's out of the ordinary, that it's deviating from the standard. And so when that happens, that's a time to move on a trend. Yeah, we want to jump on the trend as it's moving. I don't do this with, you can do it with Bitcoin, but I don't really do it. And then I have the moving average up here. This is just kind of an additional confirmation. You don't need to have it. With Forex, it's probably better to have it, but you don't really need it. If you're because price will tell you what's happening. And like I said, this is just the trend portion I wanted to show you. It's very, very simple, very basic. Like your Heikin Ashi tells you your quick trend. You can there's all sorts of trend indicators for your secondary confirmation. You can even use just the moving average. Heikin Ashi moving average can be a decent thing, but you need this oomph indicator, this volatility indicator. Some people will confuse this with volume. I don't, because volume is for closed markets like the New York Stock Exchange or futures, but in Forex and Bitcoin, there are several different exchanges, and so the volume can be different from broker to broker, so it can be a little bit deceptive. So I stay away from volume indicators for the open markets, but the closed markets, it's a great indicator. For single stocks, definitely you should be using a volume indicator. But for big, wide open markets where volume is spread out over several different brokers and it's not closed, it's an open system, you want to use volatility in the price of the oomph of the price. So I just wanted to go over that real quick. It's fast trend, slow trend, and off. That's all you need. And then you want to throw a moving average on there, you can. It's real simple, real basic. People want to complicate the peanut butter and jelly sandwich and have 800 different million lines on there. You don't need it. So that, and you can see I got several, I think I got about 700 different types of, some are trend indicators, some are standard deviations, a really good one. SSL, that's a different type of moving average. I got news calendars. I've got pivots. That's for day trading. You don't really need those for. They don't really work as well. It works fairly well on slow markets for day trading, but not much else. Some different meters, trend direction force index. That's another one of my favorites. There's all kinds of them on here, and then some expert advisors. Those help me to manage my trades once I'm in them. So I just wanted to show you, just give you a glimpse overview of what I'm looking at, and it's very, like I said, keep it simple. This is the daily chart: fast trend, slow trend, oomph. You know, which way we headed. So moving right along. The last thing I wanted to talk about is this right here. Oops, I'm gonna move up. Come on. databitcoinity.org. Hope I said that right. databitcoinity.org, beta version. This is just a great website. It has all sorts of different types of things about exchange lists, trading volume. One of the things I wanted to look at real quick, show you guys how important market cap is. We went to market cap, spread out to the 5-year chart. What does that remind you of? Does that look something like, does that look familiar? Remind you of the price of Bitcoin? Boing, get the double peak right there, and then double peak right there. See how important market cap is to price? Why is money flow? We need the money flow in because it's all about supply and demand. The more demand there is, the higher the price is going to go because the more scarce it is, and it's a relatively fixed amount. If the velocity of the money comes in really quick, then the price will shoot up because the demand is, there's more money wanting the same amount or slightly more bit of Bitcoin. There's a lot more money wanting a slightly bit more amount of Bitcoin, and that's what moves price. And so that's why we want war. We want, we don't want war, but if for prices, we want it. Because that's the money gets scared and then looks for safe havens, and that's one of the areas that it floods into when the stock market corrects. The money will get scared and come into this market. That's what we want. We want the money to come in. And then there's a combined order book. I thought this was pretty neat. It shows the different markets. Here's our GDAX. That's Coinbase, and you can see. If you put it on here, you can see how there's a lot of orders piling up right there at 7,500, and then this is the combined total. But in Coinbase, you can see that there's a lot of orders, a lot of buy orders lining up at 75, a lot of sell orders starting to pile up at 85. So there's a lot of resistance at 85, according to GDAX. Now that'll vary from market to market. That's why we can't use volume. Because see, now there's a lot of sell on Bitstamp, but not a lot of buy. Whereas total opposite here on GDAX, where we got more buy than sell. So just something to look at, but that's why I don't take a look at this volatility index, some spreads, arbitrage. Just you can play around with it, look around it. I just thought it was a really cool website. They got a lot of stuff on here, but the two ones I wanted to show you were those two. That's all we have. Hit like and subscribe. Thanks for stopping by.